Okay, so really quick midday update here on the on the markets and on the losses that I've been taking. I don't know any other way to say it. Um, but all the indices just kept going up. It blasted right past the sell that I had during over this area, this 900 area on, or no, rather on the 925 area on the S&P, which I was playing for this resistance area right here. The Nasdaq also blasted right through this area, the 325 that I said that I was going to take. That blasted through. Well, I already talked about that. It blasted through that, and I was looking at the 425. And I said I was going to maybe take it, but I didn't have any pieces of evidence to do so, except for maybe. I mean, I wasn't looking at the 15-minute, but this kind of uncertainty candle. I can't call it a doji because the body is too big for it to be called a doji. Plus a almost bearish engulfing candle. Like it's not even. It's very very close. Let's see the low of this 56.25 and the close of this is 57. So technically by like not even 1 point, it is not a bullet bearish engulfing technically, and it just kept going up. So I took a loss there. And so typically what I would do before is I would have laid out like 3 different traps on the 925, the 2000, and maybe the 3075, and I would have gotten sliced up on one index, 3 trades on one index. But instead of doing it that way, I spread it across 3 different indices, and I still took 3 losses, but I feel better about this because it took more of a move to cut me out of three losses. So I spread my traps around to a larger area, right? So it actually mitigated risk because it took a bigger move to stop me out. Now what we have here is we had the trade that I had from before that never got picked up. Which was this playing. Wait, I have to redraw my lines here. It's a 175. I took it at. Wait, that doesn't make sense. Did I remove it? It must have been this area right here, but I forget what time frame I was looking at it, and that made me like that so much. Was it the 15? I guess it was the 15. So I guess this. I thought it was the 30. I thought it was gonna look different on the 30. But no, it looks weird on the 30. So it had to have been the 15. Anyway, that doesn't matter. The time frame doesn't matter. It's just a summary of what price action does. But this rally base with the nice looking reverse kangaroo candle there, inverse hammer, whatever you want to call it, this is a very nice formation. I even have the backup order of it as well at the 250. But it looks like this is working for now. I mean, I could really use a win after taking 3 losses in a row. And this is, it looks like it's working. It looks like it wants to reverse, but not a lot of evidence to support a weakness in this movement. Like there's no divergence. The only thing I have really going for it is the fact that it is in an area it's in a good area. It hit the resistance. Now, going back to the technique that we were talking about, let's bring it towards the beginning of the day. It's easier to look at now because there's more bars that have been printed to summarize this line graph. So right now the strongest index is the Russell, and the weakest index is the Dow, which actually it does not bode well for me. I would have been not mode. I would have been more confident if the Dow was the strongest and it was starting to reverse. But if the Dow is the weakest, then the reversal is less meaningful than if it was on the Russell. So let's look at the Russell real quick. Similar situation. It ran into traffic, and it is coming back down. It was probably this area. This looks really nice here. This drop, base drop. But that would have actually been sliced through. You would have probably had to have taken this on a higher time frame, maybe. I bet on a higher time frame, maybe a 2-hour time frame is a nicer looking zone. Yep. Kind of weird looking. It's like there's a lot of chop happening here. But you can say that this rally base drop, right? Small drop followed by a really strong drop, right? Strength is probably the most, in my opinion, the best indication of probability because it indicates the largest imbalance of orders in that particular area. So I actually like what I'm seeing on the Russell. I didn't take the trade on the Russell. I took it on the weakest, which was the US 30. But this is more of like I do multiple time frame analysis, but this is also kind of like a multiple index analysis now that I'm starting to incorporate because it just kind of dawned on me that the indices started to move this way, and I got surprised by all these movements, and this is kind of explaining some of that surprise. Hopefully, it keeps up. Hopefully, the indices stay convergent instead of diverging. And hopefully this continues to move back down because I could use a win for the day.